Are you looking for a source of secure income that's paid monthly? Well, let me tell you about a really amazing opportunity that I've just come across. Stick around until the end to find out some of the pros and the cons of this investment type. This is the Cohen and Steers REIT and Preferred Income Fund. Now, I know that not everyone is a fund of the CEFs, the closed-end funds, but this is a fund that's been around for quite a long time, and I think it's an exception to the rule for many of the funds. It's like an ETF in terms of a CEF. It trades on the stock market. They IPO with a certain amount of money that management has to invest. Now, most of the time we don't see a lot of price movement or price gains over time, but we do see that they can spin off quite a bit of income, which can be very attractive. Why might you be interested in a CEF? Well, there's a couple of really important things that you do need to consider when thinking. 4 key reasons to think about CEFs. Number 1, they usually have a very high yield and are income focused. Number 2, they very frequently pay monthly distributions. Number 3, they can also offer exposure to different alternative assets. And number 4, they can usually be very actively managed, so you have the professionals running these alternate asset classes for you. Now, why might you want to be careful about CEFs? Possibly the most important reason is CEFs often have quite a high level of leverage, which can absolutely enhance returns, yes, but it can also really add to your risk factor, particularly if you haven't considered this carefully. And number 2, they can also use more speculative investment approaches, such as using derivatives. Okay, now let's get into it and let's have a look at what this closed-end fund has to offer us. Okay, so here we are at CEF Connect. Now, if you're not used to closed-end funds, this is an absolutely fabulous resource. It is brought to us by Nuven Closed-End Funds, but as far as I know, this is a very unbiased set of data. Now, what it really does is it sort of lifts the hood and allows us to understand a little bit more about what's going on with the particular funds. So here I've pulled up the RNP Cohen and Steers REIT and Preferred Income Fund. Now, the first thing to know is, of course, the price can get disconnected from the net asset value, from the NAV. And as we can see here, for example, in 2022, the price traded at quite a discount here to the NAV, which basically means that you could buy the issue here at less than the value. And here we can see near the end of 2022 and in early 2023 at times price traded at a premium, which meant that you're paying more for the assets held than the value of the actual assets. Now, one of the beautiful things about this type of chart, of course, is that the assets are usually tradable on the open market, certainly here for preferred and REITs. So the calculation of the NAV is very much an objective, what is the asset trading for on the open market. Now, a couple of quick points here. Distribution frequency is monthly, which is absolutely wonderful for people looking for income, and it's got a comfortable and nice distribution rate here of 8.9%. We can see over here, over the last 52-week average, it has been trading at a small discount here. It's currently trading at a small discount, but we can also see the steep sell-off here. Now, flicking through a couple of these quick elements here, looking at some of those key characteristics. Now, the fund basics, and it's really important to understand the investment objective here. Now, number 1, like most CEFs, the focus is on income with a secondary focus on capital appreciation. Now, there are a few CEFs that do provide capital appreciation, so do look out for that, but it's not that common. And even when they say they might be looking for capital appreciation, my experience is it is not that common. As we scroll down here, it has been around for 20 odd years now, coming up actually to the 20-year anniversary. The share price at the start was $25. The inception NAV was about $23, $24. And so it's also important to note that, in terms of price, it hasn't really gone anywhere, but over that time it's been paying out a very healthy distribution rate. Now, scrolling down a little bit, it's also important to understand a couple of key elements here. Leverage. Effective leverage here is at 33%, so this is very much at the extreme end of leverage for a CEF, and it doesn't sound like a lot, but trust me, that will boost your returns as well as increase risk. Now, it's also right at the capping point where they can't really go beyond that effective leverage rate. Now, the other important thing here is to note that the interest expense here of about 1.1%, which is probably lower than what you or I could borrow money for, is added on here as part of the annual expenses. So when you're looking at this 2.2 annual expenses, you're looking at the interest rate, the interest expenses basically, being half of that cost. With management fees, it's actively managed, which means they're trading in and out as they find the best opportunities. And so the management fees here, what we'd expect to see for a CEF, and they're relatively higher than you'd see for an ETF, particularly a passive ETF as well. So looking back over the history, it had reasonably stable distributions here from 2003 through to the financial crisis period of 2008. The distributions then, I think, switched quarterly for several years, and then in about 2016 it switched back to monthly at a rate of about 12.4 cents a month, flicking up to about nearly 14 cents a month in 2021-2022 period. As you see, every now and then there's a large special distribution, but these are very, very uncommon, and if you're fortunate enough to hold it at the end of December 2022, you would have received quite a nice surprise dividend there. Now, as I suggested as well, CEFs can trade at a discount or at a premium. So we can see here over the 1 year period, it has at points traded at almost a 10% discount, and almost at a 10% premium at times. So when you're thinking about CEFs, it's really important to be sure that you're buying it not too often at a premium, and ideally very much at a discount. Now, if we switch these time frames as well, we can also see that, for example, 2019 it was trading at a minus 15%, so quite a hefty discount here, as well as a point in 2020 as well. So there are opportunities often to pick up the fund, paying a lot less per share for the fund than the actual value of the assets inside, and that can actually boost long-term returns. Alright, so let's get a sense of what's going on in here in terms of the portfolio characteristics. So it's important to note that the annual portfolio turnover is 40%, so that seems reasonably high, but remember, this is an actively managed CEF. Now, scrolling down here as well, asset allocation, stock 45% preferreds, 25% bonds, 25% roughly, a little bit of convertible, etc., but not a huge amount. Probably one of the most things I'm interested in here is this credit quality. So there's a little bit of A-rated bond there, a lot of BBB rated, which is good to see, a little bit of BB rated, which is, in my opinion, getting into the slightly more risky territory, but hopefully as an actively managed fund by professionals, well managed. And then also the maturity breakdown, and they've got a lot of very long-term bonds. Now, one of the important things here as well as we look at this is we would expect to see that as interest rates begin to fall, if we do hit a recession, the value of these bonds should begin to increase quite a bit as well, which should boost the underlying net asset values for this fund. Now, just switching over very quickly to Seeking Alpha, just to give us an overview of what's going on inside of the fund. Having a quick look at some of the holdings. So most of it is real estate in terms of this preferred stock. There is that big chunk there also in the bonds. Now, scrolling down as well, looking at the top 10 holdings, we're looking at real estate here. I think most of these names are names that many investors will be familiar with as well, and total number of holdings here of about 310. But if you're looking at the proportion here of these top 10 holdings, the top 10 holdings are already 30% of the fund, basically. So quite a concentrated fund. So even though they've got quite a distribution of holdings, a lot of it is heavily concentrated in what I think, looking down the list, are fairly high quality and reliable REITs. So look, I think this CEF at this point in time is trading at a good rate. I think it has a good distribution yield. It's got a fantastic history. And I think if you're looking for income, this could be a really interesting option for you. Now, I know a lot of people are not keen on the closed-end funds, but let me know what you think in the comments down below. Do you hold many closed-end funds in your portfolio? Is this something that you're interested in looking at? Is it something you're interested in considering? And if so, is this particular closed-end fund on your watch list or in your portfolio? Right, light up that comment box, hit the subscribe button, and let me know what you think today.